Welcome back to the Map for College learning community. My name is Ernest Manelli, founder of My Action Plan for College, and I'd like to start the discussion in more concrete terms about financial aid because I know that many students and families have this discussion at various points during the application process about the balance between opportunity and affordability. And ideally, you want to find an intersection in which the affordability factor and the viability factor for you as an applicant, where they really find a sense of confluence and alignment. In other words, you want to find a school that you would profit from intellectually and for your future career prospects. And you also want to find something that's affordable and reasonable and within reach financially, because it doesn't really profit many students to go into huge amounts of debt. Now, let's clarify for a moment. When I hear an undergraduate say, "Oh, I went into $150,000 worth of debt," what they really mean, because the student at the undergraduate level, because the amount of student loans that you can take out as an undergrad. Now, as a graduate student, believe me, I know this from personal experience. As a graduate student, if you're out in the world making money and you've got some property and real estate and you've got some investments, and then you go back to school, if you do everything right, then they say, sharpen your pencil, because they can soak you with, almost any degree of student loan indebtedness. So the people who have gone to law school and medical school and, architectural school, whatever the case may be, they know what I'm talking about. From a professional standing, when you go to graduate school, it's a very different ballgame. But for undergraduates, your student loan indebtedness is limited and capped each year, freshman, sophomore, junior, senior, by congressional legislation. So, in other words, Congress actually took the time to say, an undergraduate student should only get into a certain amount of debt by the time they graduate. Now, when the student will say from an undergrad perspective, "I went into 150,000 in debt," what they really mean is that the student himself or herself went into a little bit more than 30,000 in debt, and mom and dad have like 115, 120,000 in parent plus loans. That's what that means. So, and I know it's important. I'm trying to be, lighthearted about it, but also informative. But I just want you to know that we can really help you to understand and navigate this process. And we'd be happy to do so on an individual basis based on your specific circumstances. So, one of the most common elements that we educate families about is the distinction between need based aid and non need based aid, or merit based aid, as it's commonly known. So, need based aid is determined by the free application for federal student aid, the FAFSA. When you fill out the FAFSA, now in some instances, certain colleges will ask you to fill out what's called a CSS profile, College Scholarship Search Profile. And that gives more information to them, but it also allows you to become eligible for a wider range of potential scholarship opportunities. But in general, the need based aid that is allocated and determined by each particular college based on their financial aid award letter, if you qualify for need based aid, that's going to come from the FAFSA. And the FAFSA is directly tied in the importation of data to the FAFSA system. There are so many elements that come directly from your tax return. So if you file with an accountant, or if you file electronically, or if you have some sort of tax prep software that you use, completing the free application for federal student aid when your son or daughter is applying to college, completing the FAFSA, if you've already done your taxes right in prior years, it's actually pretty straightforward. Most of the data imports, the system will sometimes recognize, if you, plug in certain numbers and it matches with what you did for your tax return. They have really made significant improvements to that system. So if you qualify for need-based aid, it's going to be based on your family's financial picture overall, in terms of the biggest number being the adjusted gross income. And so, certain situations get more complex, but in general, the amount of expected family contribution, what you have as EFC, that is heavily driven by the adjusted gross income. And again, these schools can look back 1 or 2 years, to see if, were you making a boatload of money in a certain year and then the next year you fell on hard times, or maybe you had to sell your business, or maybe correspondingly you've been building things up and then you hit a real um, professional stride and made some significant progress. So all of that to be said indicates that your financial picture, driven by your adjusted gross income, that really is the driving force behind your expected family contribution. Now, in terms of need-based aid, some schools will say that they are committed to meeting 100% of demonstrated needs. So in other words, if the FAFSA comes back and says that you qualify for X amount of dollars of need-based aid, if a school says they are committed to meeting 100% of need-based aid, if the FAFSA comes back and says that you qualify for this much need-based aid, then that means the school is going to find a way to make that happen. Some colleges will say, well, we will meet up to 90% of need-based aid, or we will meet up to 80% of need-based aid. So not every school is capable of meeting 100% of need-based aid. That's the first thing. So you want to check that out, and your son or daughter can contact admissions, contact the financial aid office, and ask those specific questions. And I really do believe at this stage that the student himself or herself should be making some of those initial inquiries, just so they understand from their own standpoint what is at stake, and they sort of get an increasing level of knowledge of the magnitude of what's going on and the level of commitment that's involved from a family standpoint. Now, non-need-based aid, often referred to as merit-based aid, the merit-based aid could come from a variety of sources. Merit-based aid could come directly from the college or university. I know that a student that I was working with 2 years ago was really seriously exploring the University of Richmond and made an application to the University of Richmond. It's a fine school in Virginia. And what we discovered was that there were certain allocations of scholarship opportunities within the University of Richmond, some of which you could qualify for based on certain criteria of your weighted grade point average, your strength of schedule, quality of your transcript, the level of standardized testing proficiency. So some of the available pots of money for merit-based aid were available for that particular school based on if you were one of the top applicants according to their criteria. There were other elements of merit-based money that were based on particular fields of interest that they were trying to recruit and really increase their profile for. Some schools will have merit-based opportunities based on a particular career pathway that you intend to pursue. Others are trying to recruit underrepresented groups, like maybe they're trying to recruit more first-generation college applicants, or they're trying to recruit people to go into certain professional or academic fields. So you can always call up and contact or email the financial aid office for a particular college and just say, do you have any specific merit-based opportunities for applicants? And you can pursue things from there. So keep the wide scope of opportunities open for need-based aid if you qualify, and also merit-based aid based on certain opportunities. So once again, we're happy to discuss your particular circumstances and help college become more affordable for you. So once again, please feel free to like this video and subscribe to our growing YouTube channel. Thank you so much.